Hi, everyone. I'm just going over some examples for the week 2 homework. I'm going to go through an example for questions 3, 4, 7, 8, and 10. If you look at the problems, when you actually go into Wiley Plus and you're actually completing the problems for 1, 2, 5, 6, and 9, if you click on e-textbook and media, you will see there is a video. There's also an e-text where it brings you right to the portion of the text you need to use to solve the problem, or you can watch a video walkthrough example for the problem. But they're already there for several problems. So I'm just going to go through examples for the problems that are not there. So let me share my screen really quick. And here's the examples. So first of all, the first question we are going to go through is an example for question 3. The bookkeeper for Bob Company asked you to prepare the following accrual adjusting entries at December 31st. For each entry, when we do it, we're noting the number of the entry, date of the entry, and then the account title, explanation, and what we're debiting and crediting. So the first item is interest on notes payable of $2,000 should be accrued. So we haven't accrued this interest yet. So we owe it, but we haven't recorded it yet. So we need to debit interest expense, credit interest payable for $2,000. If you'll notice, the number for this is 1, date is December 31st. Second one, services performed but not billed, total $6,000. That's our second entry. Number 2, December 31st. We're going to debit accounts receivable, credit service revenue for $6,000 because we have to account for the revenue, we've earned it, and we also have to bill the customer so that we can receive payment for those services. Third entry, salaries of $10,000 earned by employees have not been recorded or paid. So that's going to be entry number 3, date is December 31st. That's going to be debiting salary and wage expense, crediting salaries and wages payable for $10,000 because we need to, of course, accrue this. Record this. It has been incurred but not recorded. Next item example, question 4. On January 9th, the company pays $5,000 for salaries and wages, of which $2,000 was reported as salaries and wages payable on December 31st. Give the entry to record the payment. Okay, so you have to think back because we know this 2,000 of this was already recorded back in December. So when we recorded this in December, would have debited salary and wage expense and credited salary and wages payable for that $2,000. Now we're going to actually pay this. So what we have to do is we have to remember to get rid of that salary and wages payable by debiting it. So it was credited in December. We're going to have to debit it now. So obviously, we already recorded 2,000 of these salaries. We need to record the other 3,000. 5,000 minus 2,000 is 3,000. So we're going to debit salary and wage expense for that 3,000. We are going to debit salary and wages payable for 2,000 because that salary and wages payable is not owed anymore. We're paying it. So to take it off the books, since it was credited originally, we need to debit it now. And then, of course, we're going to credit cash for the 5,000 we're paying. Next question. The ledger of Bob Company contains the following balances. Owner's capital, 30,000. Owner's drawings, 1,000. Service revenue, 60,000. Salaries and wages expense, 30,000. Supplies expense, 6,000. Closing entries are as follows. Close revenue accounts, close expense accounts, close net income or loss, close drawings. We want to enter the balances in T accounts, post the closing entries in the order presented in the problem, and use the numbers as a reference. So let's look first at our salaries and wages expense and supplies expense. Let's look at our 2 expense accounts. So salaries and both of those, salaries and wage expense and supplies expense, would have a debit balance, right? That's its normal balance. So it would have had a debit balance. So salaries and wages are 30,000. It's noted right here. And supplies expense is 6,000. That's noted right here. So the balance in salary and wages with expense was 30,000, balance in supplies expense was 6,000, and they would have been debited balances. We need to close them out. To close them out, we need to credit them. We want them to be zero. So we have to credit both supplies expense and salaries expense for those balances to get rid of them. And we're going to note that as number 2, right? Because they tell us close expense accounts, the reference number is 2. We would have noted the balance as a debit here. So as I said, we're closing these out by crediting them. What would we debit? We would have debited income summary because we closed those expense accounts out to the income summary account. So we're debiting income summary, again, referencing the number 2 because it's to close expense accounts, and we're crediting the salaries and supplies expense. So if you add 30,000 and 6,000 together, that gives us our 36,000 that we're closing out in income summary. Next item is revenues. Revenues, normal balance is a credit balance. So the balance would have been 60,000. And you need to note, make sure you note these balances in the problem. Different numbers, but the same idea. They tell us number 1 is what we use to close revenue accounts. So we would have debited service revenue, used reference number 1 and debited that for 60,000 because we need to close it out. We would credit income summary for that 60,000, again, referencing the number 1 to close out that service revenue. We close out expenses and revenues to the income summary account. And the balance at that point, right, our balance is 24,000. 60,000 minus 36,000 is 24,000. That 24,000 is our balance in income summary. What we then have to do is we need to close out the income summary account to owner's capital. So we're debiting 24,000 to income summary, referencing that as a 3, because they tell us up here, we need to close net income and loss. That's number 3. We're debiting income summary, and we're crediting right here, we're crediting owner's capital for that 24,000. The balance, I'm sorry, I should have mentioned this. The balance in owner's capital would have been 30,000, and that's shown up here too. They're all shown up here. Owner's capital right here, 30,000. So again, we had a balance in owner's capital of 30,000. We're closing the income summary account by crediting owner's capital. We debit on income summary for 24,000. We credit owner's capital. And there, if you look at number 3, that's closing net income and loss, right? Closing out the income summary. The next thing we have, sorry, I skipped right over owner's drawings. We have owner's drawings, and those were 1,000. Where are they? Right here. Owner's drawings are 1,000. So owner's drawings, normal balance is a debit balance. So the balance was 1,000. To close it out, we must credit owner's drawings 1,000. We close out owner's drawings to owner's capital. So right here is our number 4. We're debiting owner's capital for the 1,000, crediting owner's drawings for the 1,000. And that's, of course, we would have gotten rid of our owner's drawings. By debiting owner's capital, we're going in and noting in owner's capital what happened with those drawings, because that's a debit. It's going to decrease the owner's capital account, right? Balance in owner's capital, I think I said that was 30 right there. I already explained how we had to credit that for the 24,000 to close out that income summary. If we take that 30,000 and we add 24,000 and subtract the 1,000, that gives us our balance in owner's capital, 53,000. Question 8, this one was really, when you'll see in the problem, it is really, you can't, while you're doing the problem, when you're trying to get to these later columns in the problem, you can't see the beginning. You can't see this. So what I did, that was just way too confusing. I don't like going back and forth, back and forth, back and forth. So what I did, I wrote this all down on a sheet of paper as I went along. I had every line filled out on a sheet of paper. So as I went along in the problem, I was able to go ahead and determine this without going back and forth. If you don't mind going back and forth in the problem, that's fine. But I should probably tell you this now. I don't choose these homework problems. The accounting department chooses them. Every accounting 1 class gets the same exact homework so that it's very fair to everyone. Everyone's getting those same homework problems. So what I do every week, and I'm doing this as we go along because I didn't get Wiley Plus very far before you did. I'm actually completing the homework, which is how I know what examples need to be provided to you. But as I said, when I did this homework question, I found it easier to write this all down on a sheet of paper. I kept track of all my rows. And then as I went forward, it was easier for me to just keep going, writing it down rather than going back and forth. So we are given, at the beginning of this, we're given a worksheet, right? And these are all the information we're given in the worksheet. And then we're given some additional data. And it says a physical count reveals 600 supplies on hand, 100 of the unearned revenue is still unearned at month end, and accrued salaries are 200. So the first thing we're doing, and I think they might give you this in the problem, but I'm not positive, is that trial balance, which is basically exactly the same as what it was above. And then what we need to do is make adjustments. So first adjustment we have to make for the supplies is 400. We have to credit supplies for 400. Why do we have to do that? Well, it tells us a physical count reveals 600 of supplies are on hand. That supplies account was $1,000. There's 600 left. That means we used 400, which is why we have to credit supplies for 400. We would debit, so that's our credit. We would debit supplies expense for that 400. So that's what we're doing down here, is debiting supplies expense for 400. The next one, 100 of the unearned revenue is still unearned at month end. We've got to look at unearned revenue. Unearned revenue was $500. Well, we've earned quite a bit of it, right? There's only 100 left. So what we have to do to decrease that 500 to 100, we have to debit unearned revenue $400. That means we earned it, so we're going to credit service revenue for that $400. And the last one, accrued salaries are 200. So we're not paying them, we just need to account for them. So we would debit salary and wage expense 200, and we would credit salary and wages payable 200. This bottom number, which is our totals, we would just add this together. So 400 plus 200 plus 400 is 1,000. 400 plus 400 plus 200 is 1,000. Now we have to create an adjusted trial balance. So a lot of these numbers we can just move over, right? We can just move over cash and accounts receivable. Supplies, however, we have to adjust. So that 1,000 minus that 400 adjustment, the credit, leaves us with 600. Accounts payable is still 600. Unearned service and revenue was 500 minus that 400 adjustment leaves us with 100. The 2,100 owner's capital doesn't change. 3,000 service revenue, it was 3,000. We have an adjustment, we're crediting 400, so we're adding to that service revenue. So that changes our balance to 3,400. And of course, these are our debit columns. These are our credit columns right there. Wages and salary expense, it was 500. We have to add 200 to it. So that's going to change that to 700. Miscellaneous expense doesn't change. That's still 200. We had a debit for supplies expense in our adjustments. So we have to change that to, or include that for 400. And we have a credit in our salary and wages payable. So we need to credit that for 200. So if we were to add all these numbers together, it would give us 6,400. If we add all these numbers together, gives us 6,400. Next thing we have to do is the income statement. So of course we just take revenues and subtract our expenses. So here we have our revenues, 3,400. We have our expenses, 700 for salary and wage expense, 200 miscellaneous expense, 400 supply expense. If you add those expenses together, they're 1,300. The 3,400, of course, for revenue just carries down. Then 3,400 minus 1,300 is 2,100. That is our net income amount. If we add 1,300 and 2,100, we get 3,400. This 3,400 just comes down. Next, oh, this is going to be, so this is where we have to, let me see if I can make it just a little bit. Let's see what I can do here to get the balance sheet. Hopefully I can get most of it. Again, now we're creating our balance sheet. We're going to just look at the adjusted trial balance and carry numbers over, right? So we're going to debit 2,000 for cash, debit 2,500 accounts receivable, debit 600 supplies, credit 600 accounts payable, credit the 100 for unearned service revenue, credit owner's capital for 2,100, and let's see, sorry, and there's one, no, there's, oh, here we go. Credit 200 for salary and wages payable. So if we add this column together, it's 5,100. If we add this column together right now, it's only 3,000. What we need to do is then add the net income. And remember, we figured that out here. It's 2,100. We're adding the net income of 2,100. That gives us our ending credit balance is 5,100. So that's how you do 8. As I said, I found it easier to write this all out on a sheet of paper as I did the question. Last one, question 10. We're given several accounts, right? And we're asked to prepare a classified balance sheet in good form as of December 31st, 2022. So let's go ahead and do that. So, and this is the heading we're using. We have cash, 3,000. So if you look at cash, there it is, 3,000. And we need to list our current assets in order of liquidity, most liquid first. Debt investments, right here it's telling us it's short term, that's 1,400. We're going to add that next. Next item is going to be accounts receivable, right here. Accounts receivable, 1,500, that gets added next. Next is inventory. Inventory is right here, 1,800, we add that in next. Prepaid insurance is the last item. Prepaid insurance is right here, 1,200. If we add these items together, we get $8,900. So that's our total current asset amount. Then we're going to note our long-term investments. We have a stock investment of 1,000. That's right here. And then if we're, after that stock investment, we're adding our property, plant, and equipment. We have equipment of 10,000, which is noted here, and we have accumulated depreciation, which is noted here, of 2,000. 10,000 minus 2,000 is 8,000. So now we're going to add our current assets, our stock investments, and our equipment minus accumulated depreciation together, and that gives us total assets of 17,900. For the current liabilities, we have notes payable due in 2023 of $1,000. Those are current liabilities. They're due in 2023. They're due in the next 12 months. So that's going to be the first item under current liabilities. Then we have accounts payable of 800, which is right here. If we add that together, that's 1,800, which should be total current liabilities. I need to put that on another line. I'll do that before I note this in the from the professor discussion. We then have our long-term liabilities. We have long-term debt of 1,500, which is right there, long-term debt. We then have notes payable of 200. If you see here, this is notes payable due after 2023. So that means it's a long-term note payable. It's not due in the next 12 months, it's due in more than 12 months. So we're gonna add that next. And if we add the 1,500 and 200 together, it's 1,700. Total long-term liabilities are 1,700. Next item, we have total liabilities. We're adding the 1,800 and the sorry about that, 1,700 together, and that gives us 3,500. What you'll notice, I have a dollar sign. If you notice at the beginning of each column, I have a dollar sign at the end. For example, for our total assets, I'm going to have it again for total liabilities and equity. What's next? Oh, owner's equity. Next, we're going to list owner's equity. We have owner's capital, which is right here, 14,400. Then to determine our total liabilities and equity, it's going to be the total liabilities of 3,500 plus owner's capital, 14,400, which gives us 17,900. Those two items are in balance. Yay. So we did it correctly. I'm going to go ahead and stop the share. I'm just still working on the mini lecture. I had to create all these examples myself, so it takes a while. But I'm going to post these now, and I will post hopefully the mini lecture early tomorrow morning. Have a wonderful week, everybody.